What is up, my beautiful friends? So today I actually want to go over something, the power of Finance Friday. So remember to do the thing and pay off the stuff and look at a different video of mine if you have any questions as to what that actually means. So when I get my technology up and running, which here we go, we will see the power of Finance Fridays. So something that I do, I have my journal. And yes, it's pen and paper and it's old school and inefficient, but you know, someday AI will replace each and every one of us and it'll be perfectly efficient and we'll be much happier, hopefully. Anyway, but until then, I'm going to use my pen and paper. The reconciliation, the power of it, especially if we just kind of track this over time, it's just kind of a cool thing to do, is we can actually back into expenses through what is known as a reconciliation. Now, what is a reconciliation? It's actually pretty easy. Beginning balance, right? Plus additions minus subtractions equals ending balance. So if we track this stuff over time, we could basically discern, you know, let's say it's January 1st and our beginning balance was, let's say we're in debt. Let's say our cash minus credit cards, and I call this working capital to be fancy. So now we can say our working capital is this. Because if you're a business, it's basically current assets minus current liabilities. On the personal individual side, that's typically your cash minus your credit cards. You know, we could get more nerdy and into the weeds. I don't care to do that. Other people love that, and I will eventually. But right now, we're not doing that. So cash minus credit cards is your working capital. And so we can kind of use this to kind of come up with a little, you know, a mini net worth position to kind of figure out where it's at. So anyway, let's say at the beginning of the year, it's minus 15,000. So we start off. We've all been there before, but let's say we can figure out pretty quickly that we've made, you know, we've brought in $50,000 this year. Now, you can do this however you want. You can do $50,000 before taxes. You can do it after taxes. It really doesn't matter all that much. It just depends on, I would do after, even though I'm a tax person, I would do it just after taxes to simplify the concept. We could figure out what the tax is once you file your actual tax return. However, so just for simplicity, your wage earner, I would just do it without, you know, and not really worry about it that much. But get as nerdy as you want because that's what this is all about. And let's say our ending balance is we have 20K. So 15,000, you made 50,000, you spent some money, and you ended up with 30K. Yeah, 20K. So this plus this is 35,000. What am I doing? Gotta get this call colored for the people. So negative 50,000, negative 15,000 plus 50,000 is 35,000. Minus 15,000 equals 20,000. Now this was just pure coincidence that these two are equal. These are not always equal. In fact, you know what? We're going to change this to gold. There we go. So anyway, so that's a reconciliation. And then if we want to get a little bit nerdier, it's mid-August. We'll just say it's beginning of August, just for simplicity. We can take this 15,000 and divide it by 8, which is just shy of 2,000. So it's like 1,750. I do rough math, so that's just how my brain works. We can nerd out and get as granular as we want to, and that's the beauty of this process. So that is kind of a cool thing if you can keep track of this stuff over time, especially when tax time comes around, because that's typically when we are actually more in it with our finances. We can do a quick reconciliation like this and actually figure out what this piece was. What was the money going out on? Now, in this piece, and this is an oversimplified example, it's probably not realistic for anybody, but let's just say, where did that money go? It could have gone to, you know, we tracked the loan repayments. You could have put money in a retirement account. Like, this is very simplified. The additions could be income, and we're going to do this in blue. Income, loans, I mean, how do you get money added to your bank account? Interest? I mean, I count that as income, but there's lots of different ways that you can get money. Actually, there's not really that many. There's income and debt is pretty much the only way. And same thing with subtractions. Expenses and loans. Loan payments. That's pretty much it. Yes, there are more ways, contributions, gifts and that sort of thing. But big picture, that's pretty much the options. So anyway, hope this helps. You have a beautiful weekend, and until next time, I will talk to you soon. Cheers.